I'm seeing a lot of videos out there talking about the new Bitcoin ETFs.
The Bitcoin ETF.
Bitcoin ETFs.
This ETF was approved.
As well as chatter on Twitter talking about the boycott of Vanguard for not listing these ETFs. Well, in this video, I'll answer 7 key questions, such as why were these ETFs created, what will happen to Bitcoin, and what will most likely happen to Vanguard. Let's dive in. The first question would be, what is the purpose of these ETFs? Well, the answer, regulation. These ETFs are now regulated by the SEC, which makes them more legitimate. See, a lot of people out there have been apprehensive about investing in crypto, while now turning them into ETFs and putting it into large financial institutions. You're gonna have a lot more people buying this asset class. This leads to question 2, which is, what will be the result? Well, if you're a Bitcoin investor, this can be good news. You're going to see more people buying this asset class, which can drive that asset class price up. So good news for you, Bitcoin investors. This leads to question number 3, which is, will you make bigger returns with these Bitcoin ETFs? The answer, no. It's the same asset class. Whether you buy on some kind of broker such as a Coinbase, PayPal, Square, something like it, or going through a large financial institution, you're going to make the same returns because, again, it's the same asset class. It's Bitcoin. Question 4, does Vanguard not holding this ETF really matter? The answer, no. The reason is you can still buy through other financial institutions. I'm on another site here called nerdwallet.com. It's got ETFs including iShares Bitcoin Trust, Van Eck Bitcoin Trust, Fidelity Wise Origin Bitcoin Fund, Franklin Templeton Digital Holdings Trust, Wisdom Tree, Valkyrie, Grayscale. There's a whole list. So if you can't buy through Vanguard, don't worry about it. You can still go other places, or you can simply just go directly through Coinbase, PayPal, Square, and another platform like it. Question 5, I have to mention this. Is this boycott blown out of proportions? The answer, yes. Here's a metaphor. Sometimes when I'm traveling, I like to stop at a gas station and pick up a Coke Zero. I love Coke Zero. I'm not promoting Coca-Cola in any way, shape, or form, but happens to be one of my favorite drinks. However, not all gas stations sell Coke Zero. They'll just have Pepsi products. That's totally fine. But am I going to stamp my feet, have a temper tantrum like a little kid, and then boycott that gas station for not selling Coke Zero? That's ridiculous. That would never happen. Well, on Twitter, we're seeing that behavior because somebody can buy a Bitcoin ETF through a financial institution. However, they can just go down the street and buy it somewhere else. This leads to point 6. Will there be a negative impact on Vanguard? The answer, no. So I found an article from fortune.com, and there's an analyst, his name is Dave Nadig, made a few really good comments. One is, Vanguard won't even see a dent from this situation. And point 2, Vanguard won't lose a single 401k out of this situation, and he is absolutely right. People are not going to leave Vanguard because they don't have a Bitcoin ETF. I'm surprised there was even a boycott on Twitter. That's ridiculous. And this leads to number 7, which is not a question, it's more of a statement for myself, which is you need to put things into perspective. You have wealth building mode and you have wealth protection mode. So wealth building mode is when you are still working, you have a timeline to achieve financial independence. It could be 5 years, 10 years, 15 years, 20 years or out. In that case, you are responsible for building your own wealth. You are responsible for buying individual stocks, or if you want to buy individual crypto coins, if you want to build a business, if you want to polish your resume, if you want to go to a job interview, you are responsible for that. A large financial institution like Vanguard, they're not going to polish your resume. They're not going to do your interviews for you. They're not going to start your side hustle for you. They're not going to build your business for you. Again, that's your responsibility. Their job is to protect your wealth. So if you're somebody who is nearing financial independence or retirement, or if you sold a business, if you sold some real estate or inherited capital from a loved one that recently passed away, you definitely want to be in wealth protection mode. You don't want to put that money in your bank account and have that temptation to spend it on something stupid. I know you want that new Tesla Plaid. Okay, try to not do that. I would go into wealth protection mode, give it to a financial institution, or you can give it to a financial advisor or wealth manager. They're going to protect it. That's what ETFs are for. That's what index funds are for. That's what mutual funds are for. Sure, you can buy these new Bitcoin ETFs. You're going to get very similar returns. But honestly, if you're in wealth building mode, which I know a lot of you are, why not just go to Coinbase, PayPal, Square, any other platform where you can buy it direct? You're in control. You get to buy and sell this cryptocurrency, Bitcoin, on your own. Now, to take a step back, when people join Tykr, we like to let them know that if you are interested in investing in crypto, try to go 5% or less of your net worth. It is highly volatile. Yes, we can expect to see this asset class increase over the next year, but when the dominoes start falling, which they most likely will at some point, you're going to see large institutions sell, then another institution sells, and then another, and that share price can be cut in half, can be cut by 75%. We saw it before. You can certainly see it again. So don't get into a mode where you want to take a second mortgage out on your home and go all in on crypto, especially Bitcoin, because you could end up losing it all. Just be careful. Now, circling back to Tykr, we're all about Warren Buffett style investing, finding those strong, safe businesses, value investing in businesses that'll most likely see solid returns over the next 5, 10, 15, 20 years. If you like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to find some strong businesses you can invest in today, I invite you to join Tykr for free.